Good afternoon. Welcome to the TheoTrade afternoon video. I am Blake Young and today is June 26, 2025, and we're going to be looking at industrials and transports and maybe a little bit of miners today as we see equities pushing higher. So normally when we've seen the equity market move higher and higher and higher, we've seen a lot of movement into tech stocks, but today we're seeing a shift into industrials and into transports, which are part of the industrial sector anyway. As we can see, the S&P 500 is pushing into its overbought zone, has not been able to put in a new 52-week high, but it is absolutely trying to recover that full move. And this does feel like it's the end of the quarter, as the professor would call it, window dressing. We seem to be pushing this higher one more time to see if we can hold it up into the overbought and maybe even try to tag the 52-week high before the end of the quarter. Now, that doesn't guarantee a major sell-off after or the first trading days of July, but I do think there's a probability because of how highly overextended we are and how little volume we've seen in this rally. So we've got less and less and less volume each day as we've moved up into this overbought area after breaking out of the consolidation sideways pattern. So higher volume in consolidation, lower volume on the breakout usually tells you that the breakout is going to struggle. Yet, like I said, we see a shift into industrials, and if we start with industrials over here, you can see we're creating an ascending triangle. This gives us an opportunity to not only break through the 52-week high, this 52-week high already established clearing all of this year, earlier this year. So we've already broke through the 52-week high, made new 52-week highs, pulling back. So this does appear to be more of an ascending triangle pattern for me, and we could see another 3 to 5% move in as little as 3 to 5 days. Industrials are pushing up to the top, and that would also include, like I said, transports, and IYT would be something we could use there. Now, this is going to be consolidating in a price pattern that's pointing upward as well, and it just needs to break through about 68, and we should see a $4 move here. That's going to give you about a 6 to 7% rally to get us into this overbought and try for the 52-week high on transports. We talked earlier about defense as an aerospace defense, and if we look at that move through there, we can see that we have put a new 52-week high, and we're struggling with that monkey bar. If we close above that monkey bar today, which we have a few more minutes till we do, if we do close above, then I would say this is a confirmed breakout, and we could see defense push into the 193 area, aerospace defense, 193 area, potentially all the way up to 200. And as we continue to see this lift, that has plenty of room from the channel, plenty of room from the breakout. The only concern is we're doing this on light volume and creating a potential bearish divergence as well. So struggling at the key highs, but industrials are gaining. If we look at some of the other stocks inside of industrials, we can do that by going into Market Watch. And you can see here are all the choices, GE and Union Pacific, Eaton, Honeywell. Let's take a look at a couple of these like 3M. 3M pulled back, creating a really quick bull flag inside the oversold area of the monkey bars. This breakout looks very promising to not only repeat this move from about 140 to 150, a $10 move, but we could go all the way up past the monkey bars. But I would say let's target about that $10 move in 160, pushing you into the overbought zone after breaking out of the oversold zone. That's a $10 move on $150 stocks. Yet again, about a 6 to 7% move in 3M in this industrial sector. Take a look at Honeywell. Honeywell also pulled back inside that oversold, defended that support level, and closed up. Now, this move, just getting back to the previous high, is tradable. But if it can break through that high, we should repeat the whole pattern and go for the 52-week high at 232 and get us even into 233 or 236 in the next week to 2 weeks on Honeywell. I like the breakout here today. I think it's a lower cost trade than waiting for it to break through the price pattern, and you're probably going to have an opportunity to add to it as it clears out through that 230 level to move to the next top. Union Pacific is interesting to me because it is forming what could be a Gartley pattern, which says we have some more upside, but we need to be careful up here in case it does create a Gartley pattern or what's called a harmonic pattern, because that would tell you that you're looking for a pullback. But if it can clear this high, and specifically if it can clear the monkey bar at 234, I don't see anything that will hold Union Pacific back from going to 245. But right now, the breakout was kind of missed at 226. Watch for 234. If it can clear 234, then you have a continuation higher. As we're looking at all of these, just keep in mind in the industrial sector, this is usually a sign of economic recovery. And this is on the tail end of the Fed talking about inflation and needing to keep rates high and concerns about the economy. And yet we are rotating into industrials as one of the strongest sectors, industrials and transports. We're also seeing some movement into basic materials. And you can see that little bounce through there. It's not super convincing, but we have seen that inside of that basic materials, we seem to be lifting into the miners. So if we put in XME, metals and miners, this is a new 52-week high and a 52-week high breakout with a monkey bar breakout. Metals and miners look like we're going to probably go from 67 to 70, not that big of a move. But if we look for the stocks inside of the miners, you'll see significant breakouts on volume with gaps. So Freeport McMoran broke out of its consolidation through here. It should repeat this pattern, which it already has done. And we're looking for that $2 move here. So now the next break would tell us that we're probably heading all the way up to 47.50 on Freeport. Now that's kind of got away from us. So we got to look at something like Newmont that hasn't got away from us and is giving us a buy signal yesterday on a gap down close outside the monkey bar. And this price pattern would bring us up to 62 as a minimum. And there's another 6 to 7% move. Even if it doesn't continue, there's a 6 to 7% move. If it breaks through there, I'm looking for 65. And we could even go back to this price pattern, this longer term price pattern, and look for that move of about $7 through 56, or I'll call it 57, so that takes you up to 64, 65 again. So there's multiple ways to look at Newmont, but they're all targeting a move up to 61 and then potentially to 65. And Steel Dynamics hasn't quite broken free. It would be in the metals and mining here, but if we can close above this 132, I'd be looking at 142, and we'd be looking for about an 8% climb in Steel Dynamics. So watch for that to break out through here. Understand that if we own it before X dividend date, then you'll also get the dividend payment while you're participating in the move up for that 8% climb. Overall, like I said, it's a weird breakout. We're not normally seeing this kind of breakout without the tech sector pushing it higher aggressively, and yet industrials and metals and mining and basic materials are stabilizing, and the ones that are showing a little bit more strength to the trend and price pattern breakouts. So I'm going to continue to watch industrials until we see a shift away from them, but right now industrials, miners, transports are the sweet spot, at least probably for this next week. And we'll continue to watch for other sectors to rotate in and out of favor. And there's a couple of confirmations we can watch, and that would be for the metals and miners. We'd be watching for gold as an inflation hedge. If we hold up at this support level and go higher, gold could easily return back to 34.80. But even if you don't want to trade gold, you could certainly use this as a confirmation to what you're watching in metals and miners. The same thing with copper. We're watching for this to break out to the top side if we expect that gold to continue to go higher, and we expect industrials to continue to do well. As you can see, we've got a couple of different monkey bars here. We got this solid breakout today. We pushed right into the overbought zone. So this is a pretty strong indication that we have demand back in industrials and in basic materials, which is being supported by the industrials, transports, and basic materials ETFs doing well today. So watch for copper to break through 517 as a confirmation that industrials are going to continue to push higher, that basic materials are going to continue to push higher, metals and miners are going to continue to push higher, and transports are going to have to therefore be the support to all that industrial sector. That's going to do it for me. Thanks for watching. Join me tomorrow in both the futures room and in the TheoTrade main room as we look at some longer term setups and plan on how we can benefit from these industrials and transportation stocks. And then of course join me again next week. Have a fantastic day and a fantastic weekend, everybody.